So supply this year has been record volumes again. How much more do you think the market can absorb before we start to see some serious spread widening?
I think we're starting to see some serious spread widening now. So, of course, spread differentiation is increasing, and that's on the back of strong supply, but it's also on the back of a general heightened uncertainty in terms of the progression of rates, the progression of inflation, and the state of the economy at large, and that's amplified in the housing market and in the banking sector.
Been characterised this year, the issuance, by a lot of very short-dated, 3 years, 5 years kind of stuff. Is that starting to be a problem for issuers, that they haven't got enough duration to match their assets?
Well, apparently not. So, that question was asked here on the panel today as well, and issuers were very clear that there is an element of refinancing risk, but in terms of real interest rate risk, they feel well hedged and well positioned. So, I think at large, we are in a situation where we are quite happy to exchange that little bit of ALM risk for the added credit valuation and worthiness of the covered bond product itself.
And that extra ALM risk can entirely be addressed by over-collateralization, putting more assets into the pool?
Well, if you look at, it depends a little bit, but if you look at certainly the German fund brief segment, there is enough excess, material on the balance sheet in order to address any sort of heightened OC requirements, and that's true for many international jurisdictions as well. So I don't think that's a huge topic.
One topic I always try to worry about is credit risk in cover pools. With the rate hikes that we've seen, which countries do you think have the biggest vulnerability to NPLs, growing arrears in cover pools?
Well, certainly those countries where the refinancing of the mortgages is a bigger topic. So where you have a lot of floating rate, that's in the residential space, and of course the commercial real estate segments. I mean, those are the cover pools that people are looking at now, especially in the context of the UK and the US markets, and that's something that we have to address as an industry, and banks have to address to their investors.